China exported quite a bit of silver, and that silver didn't go to producers of photovoltaic cells. It went to Hong Kong, it went to London, I think it went to Singapore. I mean, it was going to financial centers. So they were still managing the price. Now that in 2024 didn't happen. They still exported silver, but that was going to industrial users, basically, presumably for photovoltaic cells and other applications. I think they've taken the view, and particularly since Donald Trump started talking about tariffs and all the rest of it, that, right, in line with their views on rare earths, they say, right, okay, that's it. We're not exporting anymore. And I think that's created a crisis on top of a similar problem with silver on Comex that they had with gold.
Gold has recently surged, briefly touching $3,500. Yet something odd stands out. Trading activity on Comex remains unusually quiet. Open interest hovers below 450,000 contracts, a level typically seen when gold is oversold, not overbought. This signals that price momentum is not being driven by futures traders, raising questions about who or what is really behind the move. Institutional disinterest on paper contrasts sharply with physical demand globally, possibly hinting at deeper shifts in how gold is being accumulated and by whom. Unlike gold, silver is seeing significant speculative action. Open interest has climbed to 180,000 contracts, indicating a powerful short squeeze valued at nearly $9 billion. What's more, silver miners haven't increased their hedging activity, adding to the market tension. Analysts suspect state-level strategies, particularly from China, where government-linked actors may have long worked with Western banks to keep prices low while hoarding physical supply. This strategy may now be shifting, as indicators suggest China is stepping back from aggressive market suppression.
If you look at Comex, gold is not overbought. I mean, this is the extraordinary thing. We had this run-up in gold, at one stage to 3,500, just very briefly on a spike. But if you look at the open interest on Comex, it's been very, very low. It's currently just a bit under 450,000 contracts. That is low. It's been down to, I think, just over 400,000 contracts. That's pretty oversold. So how do you get a gold price which rises like that and nobody's buying it on Comex? I mean, what gives? Comex is just, it's just not in the equation. Silver is very, very different. The people have been really going for silver. And it's even, I mean, the idea that it's the managed money who really pushed it and so on. But in fact, the managed money has got quite a bit of room to push it further. So has the other two categories, the non-reported and the others. They can go quite a bit further in terms of their net long positions. And already we're up to 180,000 contracts, which for silver is pretty high. So it's a big squeeze. I mean, the squeeze is worth around about $9 billion at current levels, spread amongst the swaps principally. Because the other thing that's happened is that the producers, the mines and so on and so forth, have not really increased their net short position by very much. I think that side in the past has been very much banks operating for the Chinese government, because they have, there's no doubt in my mind that they have had a long-term plan of keeping the silver price suppressed. I think that's changing. I really do. Yeah, it's not the banks, it's the government.
Okay.
I mean, I first worked this one out when I had a speaking engagement in New York, and it was about, 10, 12 years ago. Mm-hmm. There were lots of silver mining companies and exploration companies exhibiting at this conference. And I went round them all because at that stage, the sort of gold bug community or silver bug community was accusing JP Morgan of rigging the market and all the rest of it. And Blythe Masters, lying through her teeth. She had actually at that time, I think it was 2010-ish, she had actually deliberately gone on CNN and said, we do not take positions for ourselves. We only take positions for our clients. And of course, everybody said, oh, she's lying. But I know people like this. I've worked with people like Blythe Masters. They do not lie. I can tell you that for a fact. You know, they will protect themselves in any interview or anything they do. They will not tell a barefaced lie, which was what she was accused of doing. Mm-hmm. So I then knew that JP Morgan was not acting, if you like, to suppress the price off its own book. It must have been doing it for someone else. So my question to all these silver mines was, tell me, how do you turn your silver into cash to pay all your, all your miners and your energy costs and all the rest of it? And they all came up with the same answer, which was interesting. They said, man from Gencore comes along, he values the doré, we get paid for that, and it gets shipped off. So where does it get shipped off to? They said, well, we don't really know, but we assume it's China. Right. We could then see how this worked. In other words, the Chinese would pay for it. Yeah, the Chinese would pay for the doré.
Okay.
And that goes outside the market. Mm-hmm. And at the same time, they would instruct JP Morgan to sell futures to suppress the price. So they managed to keep the lid on the price the whole time. Now, bear in mind that at that time, countries like Canada were closing down silver refining businesses because it's ecologically dirty and all the rest of it, and not productive. And the Chinese, I think, also were doing it more cheaply than anyone else. So an awful lot of silver doré from the West was going into China. Now, China themselves was something like the 5th largest mining nation of silver. So they were also mining it themselves. So they were stockpiling it. Now, the other side of this story, I think, is very important. And that is that back in 1983, the Chinese Communist Party appointed the People's Bank of China sole responsibility for managing the state's gold and silver reserves, acquisition, sales, whatever, the whole thing. And I mean, the Shanghai Gold Exchange, which deals in gold and silver, is a wholly owned subsidiary of the People's Bank of China. So I worked out how they dealt with the gold. That was quite easy. But silver is interesting, and we've forgotten to look at silver. But basically, the People's Bank of China has been in there dealing in silver, buying silver, hoovering up all the loose silver it could get around the world. So it has built not only its gold reserves, but also its silver reserves. Now, silver has been used, as you pointed out earlier, as an industrial metal. But don't forget that from the Chinese point of view, their last metallic standard was a silver standard in 1935. Whereas, I mean, Europe went off silver in 1873. So you can see that China's experience of silver is a lot more recent, if you like. And therefore, that's still somewhat in their psyche. I think they look at the gold-silver ratio and think, God, silver's cheap. Interestingly, 2 years ago, I think in 2023,
for years, China quietly bought silver through off-market channels, paying miners directly and refining domestically. This strategy allowed it to stockpile metal without triggering price alarms. Silver refining declined in the West due to environmental concerns, funneling even more supply to China. Historical ties deepen the significance. China's last metallic standard before the yuan was based on silver, unlike the West, which abandoned it in the 1800s. With silver's role in solar and tech growing, China's hoarding now looks like strategic foresight. As global trust in the US dollar erodes, China is laying groundwork for an alternative. The Shanghai Gold Exchange is expanding abroad, with vaults in Hong Kong and Saudi Arabia. These vaults support yuan gold conversions, suggesting an emerging soft gold standard. China's motive isn't to destroy the dollar, but to protect itself from its collapse. The endgame? An internationally traded yuan backed by gold. Quietly and patiently, China is positioning itself for a post-dollar world without being blamed for its downfall.
China exported quite a bit of silver, and that silver didn't go to producers of photovoltaic cells. It went to Hong Kong, it went to London, I think it went to Singapore. I mean, it was going to financial centers. So they were still managing the price. Now that in 2024 didn't happen. They still exported silver, but that was going to industrial users, basically, presumably for photovoltaic cells and other applications. I think they've taken the view, and particularly since Donald Trump started talking about tariffs and all the rest of it, that, right, in line with their views on rare earths, they say, right, okay, that's it. We're not exporting anymore. And I think that's created a crisis on top of a similar problem with silver on Comex that they had with gold. I have no doubt that they've got a substantial quantity of silver. They don't tell us how much, just the same as they don't tell us how much gold they've parked around, the People's Liberation Army, the youth wing of the Communist Party, et cetera, and all these various accounts where they've parked, in my view, at least 30,000 tons of gold. I mean, we're talking huge amounts. So on that basis, I think the big change, really big change, was President Trump on his Liberation Day saying, with his boards, these are the new tariffs. We're going to charge the penguins 35% in Antarctica, or what and the Chinese. And then he went up to 140. I mean, literally, just following that, China announced that they were going to speed up their trade talks with South Korea and Japan. Mm-hmm. And they also then started looking at their relationship with the other ASEAN nations, the nations, if you like, in East Asia. So President Xi then had a whistle-stop tour the following week, where he went to Myanmar, he went to Vietnam, I think he went, I can't remember whether it was Cambodia, and you got all these big countries with actually a pretty large Chinese diaspora, which are naturally, if you like, in China's pocket in this sense. And what China did, I mean, obviously she was talking about, look, we got to get this trade amongst ourselves to really get going, to replace our dependence on America. But the other thing we didn't know, which I suspect is definitely the case, was that she was also talking about the future of the currency, the future of the yuan, and how that will replace the dollar for ASEAN and South Korean and Japanese trade. And that replacement was going to be facilitated by the Shanghai Gold Exchange opening vaults outside China for the first time. And already we've had one announced in Hong Kong and one announced in Saudi Arabia, whereby you can take gold, put it in, take it out against a currency, only one currency, and that's Chinese yuan. Mm-hmm. And they listed what instruments you could use to swap for gold. So this is actually putting the yuan onto, we'll call it for the moment, a floating gold standard. It's clear to me that China's long-term strategy is to protect itself from a collapse in the dollar, not to bring it about, not to accelerate it, which the Russians would be very happy to do, which is why they were talking it up over BRICS in 2023 ahead of the Johannesburg summit. But the Chinese take this view, we've been around for, I don't know, 3 millennia, whatever. We're going to be around for another 2 or 3 millennia anyway. Why hurry? And they also take the view that the Americans, who are pretty brash, make all the mistakes. So we don't need to do anything. They just screw it up themselves. But we do need to protect ourselves. We need to protect ourselves from a collapse of the dollar, which they know is going to happen. Mm-hmm. And that protection basically at some stage, I guess, The plan is that they will fix the yuan. It'll be the overseas yuan. And I mean, it should also be the domestic yuan, but at the moment they've got exchange controls. It'll be the overseas, the international trade yuan. They're going to fix that to gold at the appropriate moment. But they don't want it to do it too soon because they don't want to destabilize the Western currency system for two reasons. Firstly, they depend on it for trade. They also depended on it for their own credit creation and the management of their currency. And they don't want to be blamed for it. They don't want to be blamed for the collapse of the post-Bretton Woods system.